Hey, what's up everybody? In this video, I'm going to be going over with you guys what actually building a max funded index universal life insurance policy looks like. Now, when a lot of people get into an IUL, this is something that oftentimes they get wrong. They don't do enough research. They don't understand what a max funded IUL is or why you would want to get a max funded IUL. And so whether you already have an IUL and you are curious to see if yours is properly structured, or if you are in the market and looking to possibly get into an IUL and you want to have a better understanding of how it works, and this is going to be a perfect video for you. My name is Ryan. I'm an IUL specialist, and this is Enhanced Wealth, my channel name, and we just teach people exactly how to enhance their wealth through an enhanced asset, i.e. the IUL. Families like the Rockefellers have used IULs, and the IUL truly is an enhanced asset. It allows you to earn interest tax-free with zero market risk. If you're an investor of any sorts, or if you ever plan on scaling a portfolio of any type of income-producing assets, then this enhanced asset will allow you to scale that portfolio smarter, faster, and safer. So without further ado, I'm going to go ahead. I'm going to pull up an illustration here for you guys. And so here I just put that they live in California, no name, just YouTube video example, male, 38 years old, in good health. Now, one thing as the agent, what we do is we're going to want to select this right here, which is a minimum non-MEC. Essentially what this means is that we're giving you the smallest amount of death benefit possible correlated to the amount of money in which you're contributing into the IUL. Now, the reason why we want to do this is because we want to max fund the policy. We want the maximum amount of premium going towards cash value accumulation, and we want the minimum amount of premium going towards the cost of insurance. Because most of our clients are looking to leverage the IUL as a vehicle to where then they can take out loans and go put it into other income producing assets, right? They're kind of treating it like a high yield savings account on steroids, right? And for the actual death benefit option, I don't ever do level or increasing. I do optimal switch. So normally what optimal switch does is that in the years that you're funding the policy, because you're putting more money into the policy every single year, the death benefit has to get a little bit bigger to allow for that capital to enter into the policy without triggering any taxes. That's what the non-MEC right here stands for. That essentially just means you're not gonna trigger any taxes, which is a huge plus, right? One of the most advantageous parts about the IUL is simply the fact that you can earn interest tax-free, and you're able to go ahead and take money out of the IUL tax-free as well. So I do optimal switch, which is a hybrid of increasing and level. So once you hit retirement age, or once there's a designated year in which you don't want to be funding the policy anymore, the policy will take note of the fact that you're no longer contributing capital into the policy anymore, and so it's going to switch over to level, just because there's no reason for your death benefit to continue to increase when you're no longer putting premium into the policy anymore. Now, there might be times where you'll see that it'll switch back into increasing, and that's a good identifier because that simply just means that you're earning so much interest in the IUL. All that interest, again, the interest within the IUL covers its own fees, and then everything that's left over, the excess, gets paid into cash value. And so if you're making a ton of interest and you're making a lot of compound interest, then that money is getting paid back into the policy. And because so much money in interest is getting paid into the policy, the death benefit has to increase so that the money in which the IUL is producing within itself, with the interest that it's accumulating, they just want to make sure that it's not going to trigger any taxes. So you might see that the death benefit sometimes later on in the policy switches from level back to increasing just because it's performing so good. So here in this case, what we're going to do is we're going to show monthly contributions of $5,000 per month. and this individual is 38, so we'll just assume that they want to retire at like 55, and we'll go till age 55. That's pretty common for most of the people I sit down with. And I'm not going to put a lump sum for this example, just because what I'm emphasizing in this video is how to tell if your policy is max funded and why you would want your policy to be max funded. And then, so here, I'm not going to show any retirement income because, again, I'm purely just kind of using this illustration as an example to show how to tell if your policy is max funded or not. But I am going to add the annual cost summary, just because I always add the annual cost summary, because I always actually break down the fees with all my clients. This is such a great performing IUL that actually my favorite part is just going over the fees, because right next to the fees shows how much money and interest is getting paid into the policy every year. And so I just love breaking down those numbers. And so we're going to go ahead and calculate here, and then we're actually going to dive into these numbers. All right, guys. So the numbers just loaded up here. So we can see that we selected a minimum non-MEC death benefit. So for a 38-year-old male who's healthy, and that individual is putting in $5,000 monthly. So what the minimum non-MEC death benefit is 1.1 million, right? And so we know, as the agent, we know that this is the minimum non-MEC death benefit because we plugged it into the illustration. But you as the client, how are you going to be able to determine whether or not this is a max funded policy, which is the equivalent to a minimum non-MEC, right? They're one of the same. So I'll just kind of go over these numbers here really quick. So this individual is putting in $60,000 a year, $5,000 per month. You can see here, this is the accumulated value. This is what they have sitting in quote unquote their high yield savings account inside the policy. This is the column in which they're going to be earning interest on this money. And then this column here, the net surrender value, just think of this as your line of credit with the life insurance company, right? If you wanted to take out a loan, this is how much you could take out. And this is assuming 7.1% here. 7.1% here. And then this is the death benefit. So you can kind of see that's increasing with time. And then you can see, as I mentioned, this individual, for example, wants to retire at 55, so they're no longer going to be making contributions into the policy anymore, right? So that's all fine and great. But again, the whole point of this video, how can I, myself, as the client, make sure that I'm working with somebody who's actually structuring a policy that's going to help me, right? How can I identify, how do I know whether or not this is a max funded policy? Well, just ask the agent, or if you like what I'm showing you, then you would ask me, and you could just click the link in my bio to book a time with me, and I'd be more than happy to structure a max funded IUL for you. This is how you'd know right here. The guideline annual premium, GAP. Ask the client or ask the agent to show you the premium summary, right? You want to see the guideline annual premium. So the maximum amount of money that you can put into this policy per year is $60,000.04. Well, if we look back at what we're contributing per year, we're putting in $60,000. So that means you're max funding the policy. The maximum amount of money in which you are able to put into this policy is $60,000, and you're putting in $60,000, right? So that means it's max funded. It's easy. That's how easy it is. But keep in mind, guys, sometimes max funded policies don't work for everybody, right? Let's just say you're a business owner. Let's say that you are in a commissioned job, or let's just say you get paid bonuses, or, all these different things. And you don't have a fixed income, right? So if someone's like a software engineer and they make really good money, and they live in Silicon Valley, and they get paid a really good salary, and it's a fixed salary, and they're just putting in $5,000 per month, they're going to know that every year they're going to be putting in $60,000. So they would want a max funded policy for $60,000. Super simple, right? But there's some people, real estate investors, business owners, people who work commission, 1099 freelance contractors, all those types of people, they don't have a fixed income. They don't really know how much they're going to be putting in. So basically, when I have the conversation with those clients, I'm asking questions like, hey, how much do you see yourself based on the projections of what your business is doing, based on, year over year, how much, income, how much has your income gone up per year? Like, is it, 10%, 6%, 3%, 20%? We kind of go over those numbers and we break down those numbers because we want to make sure that we're not pigeonholing our clients either, right? So let's just say I had a client who did want to put in 60,000 this year, but next year they want to contribute a lot more, right? Those are the conversations that we're having with our clients so that we can make sure that we're structuring the policy specifically tailored to their needs and also tailoring it to what their future income might be as well. Because the last thing that I want to do as an agent is cap one of my clients off at 60 grand a year, and then they come back to me and they're like, hey Ryan, I just got paid a big commission, or I just sold a property, or I just sold my business, or I just did XYZ, and I want to put this capital into my IUL, and I'm like, hey, sorry, you can't, right? So we definitely make sure to have all those conversations with all of our clients. We ask them many questions to really get them thinking so that we can make sure that we're tailoring this specifically to you, your business model, to the amount of income in which you kind of see yourself making, and all those things. So if you guys got any value out of this video, I'd really appreciate if you guys give it a thumbs up. It definitely helps it helps share the video out to more people. I definitely don't want anybody kind of getting screwed sitting down with a not so ethical agent. So I would love for you guys to share this and give it a thumbs up so that more people can self-educate themselves and get into the right product structured the right way for them. Another thing too, you guys will see a link in the description to book a 15-minute phone call with me. It's a clarity phone call where you can ask me any questions. If there's any dots that you need connected, I'll be more than happy to kind of connect those dots for you. And then if you want to see an illustration as well, we can discuss illustration numbers and stuff like that you want me to mock up for you on that phone call as well. It's completely complimentary, no charge, no anything. It's just me and you on a phone call, and I can't wait to meet with you guys. As always, thank you for watching this content. Let's help you enhance your wealth.